Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, guys. Welcome back for another week. Another volatile week. Basically, the market just go up and down, just like what I said before, and just where we go closer to Donald Trump re-election campaign and stuff for next about a month, less than a month now, about 3 weeks or so. The market just got more volatile, but this week basically I think it really is a week of what I call the greatest showsman of Mr. Donald Trump. President Donald Trump is really playing the market. I don't know how to say. I mean, last Friday he basically been having COVID-19. Having tested positive, and over the weekend basically said I'm feeling fine. Blah blah blah. Loads of missing. Different type of informations coming out from White House, and then suddenly boom, he came back out. And on Monday, he basically came out and stay in the warehouse and start doing work and so forth. And the market basically just go up and down as his control. One thing though, just wondering. I mean, for people at his age, which is 70 plus, I believe, they're supposed to be most vulnerable. Age group, but obviously he's the head of a state, so people, I mean, the whole country basically try to look after him and give him all sort of whatever drugs available to make him healthy again. And the speed at which he turns things round, it's like when in the hospital 3 days or so, take some medicine, have some oxygens, twice or something, and then came back out on Monday and Tuesday, and everything seems fine. So and then that's the type of thing quite odd. That maybe America actually got some the medical faculties in there, got some drugs that, like he says, some experimental drugs that has not been fully approved yet. Basically give him the heads up, and then basically things suddenly get nursed back to health relatively quickly. What, like 3-4 days turnaround time? I just hope if that's the case, then that would be fantastic. Some sort of drugs available, and hopefully people in America can get their hands on it soon enough, and then help the coronavirus. But that just make you think. What happened to all this? Pardon my language. What happened to his hopes? He actually manipulated the whole situation. That, I mean, to me, I think he's the greatest showsman. He probably has some sort of COVID tested positive, but he's one of those people who possibly not, having carry a lot of the symptoms or been affected very much by it, so to speak. So then he just quickly turns things around, and also he probably uses the situation to one way or another to personal view anyway. Just he seems to manipulate the market, manipulating the receptions of how he played this COVID-19, and it does give you kind of feeling like if anybody watch Independence Day, he's one of the president who's going to lead the world to fight aliens. So in this case, the aliens is COVID-19. So it's going to lead Americans to basically fight the pandemic at this late stage, even though he messed things up. As a start, he didn't really, go into seriously and do the right thing basically with the medical equipment and taking the whole thing seriously at the start, and then only slowly realize that now he got it. I hope he understands it better. But at the end of the day, he just seems to use that as like sympathy vote kind of thing. That's why I said last week with the deja vu of some Taiwanese election about 20 years ago, being one of the candidate got shot and things, get those sympathy vote. I think that there's something to be said here. Donald Trump being Donald Trump, he's much more a businessman and also a showsman. That this is a guy who created Apprentice. Okay, he knows how to manage and manipulate, in my view, the the communication, so to speak, the news, and how people perceive him, that kind of thing. And he basically do it to this great advantage to me, as far as I'm concerned. I think overall he has the COVID-19 symptoms, but not as much as I said. And then whatever drugs he also put on to is just really help him as well. And he basically just used that to quickly bounce back up. But the way the market actually reacted to his, first of all, got COVID-19 and coming to bounce back up, and then come back up again, the market just gone up. But overall, the other thing is when he come out, what they actually do, he say, okay, yeah, we fight the coronavirus together, blah blah blah, kind of thing. Then next is just basically go straight to Nancy Pelosi's the stimulus package, and basically say, I'm not going to sign this. And the next day he's going, I'm going to sign this. So the market's go up and down, kind of thing. And he's basically have his on his fingertips. I mean, overall, he still stick his claim as the great stock market performers. Help the stock market to move sky high and so forth. And he basically, we believe if the stock market is up, then his chance of being re-elected, or his presidency overall is is in good shape, so to speak. So yes, there's a lot of what you call statistics out there, or prediction that it may be 50-50, or Joe Biden's going to win and Donald Trump got no chance, whatever. But I think overall, you might have underestimate his manipulation of the media. I think he probably get quite a bit of sympathy vote. How often you actually seen people coming out of whatever country it is, and then basically on the street and then say, get well soon to your own head of state, to your own president or prime minister, whatever, running out around the country for him. It's a great show. I mean, irrespective if you like him or not. I mean, the news basically just talk about him a lot and a lot and a lot at this late stage, even though, yes, he's sort of lacking behind on the polls, statistics, that kind of thing. But I think it will be a close call. I personally think he will probably get it. But it will, possibly quite a bit of mixture of delay. First of all, it's a vote, but mostly people will probably, hopefully they can go out and vote, but if not, they probably use the postal service. And this basically takes time. And obviously Donald Trump is going to contest it, say, if it's not in his favor, it's going to contest like hell. So I think overall he probably just grabbed it in. And it would be quite a bit of shows that to actually say, he probably get in the office, but after going through the court, that kind of thing, because he would probably say, I mean, this is what I would see. If he wins, he would just say, yeah, I did so great. If he doesn't win, he basically going to be a bad loser. He just go to use the law basically to go through, try to get a recant and get a basically the highest court in America basically to decide who actually won, that kind of thing. So I think it's going to be quite volatile. That's what I believe it is. We really volatile up and down, and I've been saying that for the past months or so, to say these 8 weeks or even these 3 months before the January election, the election in America, it's going to be quite fluctuating in the stock market, which is basically the case. You've seen in basically. The stock market go up in 500 points, down 300 points, up to 100 points, down 500 points, and counting. Up and down, up and down. For this week, mostly is a recovery week. For the stock market, it's been going up mostly. If it's just one day, then when he basically traders, I'm not going to agree to whatever Pelosi is saying, and they said he come up with, I will sign executive order to pay $1,200 to each American individual, doubt or something. That is sort of like it shows how much the past 4 years or so that how he deal with things. He basically want to redo everything and then put his stamp on it, even though it's not much change. And he just basically claim, it's one of the great, I've done so great things, great deal, whatever. And when you look at the details, not much grace, a lot of mumbo jumbo as well as comes concerned, and it's quite funny on all this stuff actually going on, and it shows how he basically, as far as I'm concerned, he's from my analysis anyway, from what I heard and read in Hong Kong, so in Asia at least, he's a great businessman. He have gone through a lot of hell and a lot of businesses go bankrupt and so forth, but he also come back up again. So he's not just an ordinary businessman that a nice kind of nice businessman. He have gone through a lot of up and down. He's quite tough, and he knows through apprentice how to manipulate the media, how people perceived him, that kind of thing. And I think overall, this also help him basically. Especially when you look at his debate with Biden, it's more like it's more two bickering people yelling each other, telling each other shut up. But overall, if you look at it, it's more like Donald Trump know how to handle the situation, and Biden is more, more timid, so to speak. And and that's one thing. Secondly, I think obviously he's a businessman. He know how to negotiate. He does negotiate, and you can see this so much. He basically just go around the world, from the last 4 years, basically tore up all the agreement that the previous administration from Obama. The only thing that he don't like, tore it up, and then we negotiate, and then the end products just slightly different. With his own stamp of characteristics on it, but not much difference at that as far as I'm concerned. And then say, oh, this is a great deal for America, and he just like to make things slightly different. What I basically thinking is happening is he knows his position, he knows what he has in his hand, and being a businessman, he must know his strengths and weaknesses, and to his strength he just use it to as much strength as possible, to push and bully people as much as possible. And then whatever claim he makes is so big and huge, and then at the end of the day it's like depends on the other side if they actually give in and give it to whatever his demand is, or basically say no, I'm not giving in, and basically he just needs some one way or another some other things to make it looks like he did some great deal. A lot of actions, a lot of speech, a lot of loud talks. So if the other side not backing down, he basically suddenly gonna be quiet. And similar things for this is like you see TikTok thing. He basically say TikTok is bad, blah blah blah, or Chinese company or with anything in connection with with China is bad, security, blah blah blah. And then now TikTok going to the court with using the American law, basically tell American government you can't do this. And then what happened now? Basically, TikTok's still there, as far as I'm concerned. The ban of TikTok still there. Basically Donald Trump want to ban TikTok, but the law basically said no, you can't do that or have a review anyway. So everything's still up in the air, and people can still download the apps. And the other thing you also see as well, he helps his own businessmen, who his partner and people who are good with him. And Microsoft tried to bid for TikTok, didn't get the go ahead, but Oracle did. I think Microsoft better fit than Oracle. And Oracle is just a storage company, right? So what they gonna do with TikTok, with a media hip company for the youngsters? Microsoft more appropriate. But then you look deeper and look at Oracle. Oracle basically is a supporter of Donald Trump. So if you support him, you get his business. That's just how it goes. Even though it doesn't really good fit as far as I'm concerned, and that shows a bit on that. So this is, as far as I'm concerned, Donald Trump's going to use whatever his strength is possible to try to manipulate the situation so he can get re-elected. I think there'll be a lot of naysayers out there say he won't, but I think he probably scrapes through, and either way, he's going to be a sore bad loser if he doesn't get the right vote and just use the court. So it's going to be volatile. And this volatility is going to make the market up and down, plus, whatever he's doing at the moment with the tweets, and then how he talk to the media and so forth. But one thing, though, many people talks about Donald Trump and stuff like that so far. But one thing quietly, nobody seems to talk about much. Again, this is from Asia. From Hong Kong, one of the news channel that I'm to look into. Something's changed again with CME. Now, last time CME changed the oil futures, so I can go negative, quite quietly, and the world didn't know about it until it actually happens. Until the contract actually go negative, -37. Some people say got out to -100. Now, once again, CME is mucking things again. Well, it's not mucking things. It's changing the rules again. Now, they have this something called the pre-market restriction. I think it's the same around the world. Um, Basically, say your pre-market prices cannot go more than up and down 1 to 5% or kind of things like that, or 10%, whatever. It's a fixed value. But now CME is going to relax that from 5% to actually to about 7% plus or minus. And so basically, CME is really ready, getting themselves ready, and all the market maker ready to have a really volatile situation that going up, that you can have the price of this particularly only affecting Dow Jones futures, S&P 500, those kind of things, Russells. Basically to have the index who can be wild gyration, go up and down, and the volatility could be higher rather than limiting it to calm the market and so forth. They actually increase it from 5% to 7%. So what happened is the circuit breakers that actually happens in March, when things gone above certain level, and the market sort of stop for 20 minutes or half a day or a few hours kind of thing. Basically, they just give this control a bit more lax. So if the market is a bit volatile, then rather than the circuit breaker comes in, they give you more space. So rather than 5% like before, it's got to be 7%. It's going to happen, I think, starting next week or something. So this is not hardly any we talk about. I put it in the a link in the description of this podcast, and you can go read about it. But again, this is like why CME suddenly changed the rules, and changing the rules would this time cause a lot of negative actions in the market. I don't know. As far as I'm concerned, everything's Donald Trump seems to be manipulating the market really well, and is more or less recovered from whatever happened a couple of weeks or a month ago, and then in September when this big job, it's come back up again, and everything seems to be going well, and the Dow Jones moving is above 200-day moving average and continue to do so, even though it's lagged behind Nasdaq. Nasdaq seems to be hanging a bit, but it's just hovering around the 11,000 mark and so it's not going broke above the 12,000 mark yet. Not making new high, but it's up there. But as far as I'm concerned, it's like there's also another thing about this election year, so it's likely, highly likely that the market is going to end up a bit higher than when it first started. Even though we got a COVID-19, the pandemics happened in between, which scares a lot of people, a lot of issues and so forth. But I think the market recover with this wad of money coming up from the Feds and the manipulation from the government. But next year I don't know. But I really don't know what happened. Probably the second year be more quiet. And then with the lockdowns actually happening around the world, in UK as well, probably more lockdown coming next week as well. It's going to affect the market. I'm sure it have similar localized lockdown on in US later on, probably happening more or less now. Unfortunately, it's not going to help the market the economy in general. The stock market may sort of gone up and up because of the war money from the Feds, but the actual economy is suffering. Still a lot of people not getting reemployed, so to speak. So last Thursday, like the employment claim, weekly claim, is gone up to like 840,000. Last week, and they was expecting about 800,000 kind of thing. So people still a lot out of job, not as much as like March, suddenly a big jump like millions in one in a week and a month kind of things. But it's still a lot. But overall, the economies, the actual economy, that mom and pop shops and so forth, that actually generate the engine of the U.S. market, is basically stalling. So at the moment you have the stimulus package that just came to end early October, and there's probably another one coming over. But this is only like a stopgap job. The bleeding of the economy is not stopping. So all this stimulus is just like a band-aid put on top of a wound that is still bleeding. So unless you stop the bleeding, the wound just continue to come up with more blood. So I don't think the economy is recovering, even though you give more time, because overall you have localized lockdown. People are not coming out properly. There's a lot more sickness going on because of COVID-19. The vaccines are available. A lot of people basically not buying things on the street. They go online. So what happened to I think commercial real estate, even people renting for their own home, you've got an issue. I'm not sure if you go through interested in commercial real estate. Because I'm a landlord, renting things to letting houses to students in UK. I also look into how commercial real estate going on. A lot of shops are bought it up. Empty now, getting more and more worse by the day, so to speak. And then people just basically fill up the shops. And what happened to those? The landlord, the renter for the commercial property just couldn't pay because COVID-19 stopped many people going on the streets and shopping as usual, kind of things. They just cannot cope with. And I'm sure this UK is not the only country facing that. America probably a lot more. If you look at around the world, I think this is what I've said before about why Donald Trump actually, not Donald Trump, Warren Buffett actually come out from bank shares. It's not just because whatever the main problem I think it is, it's not the bank itself is shaky, but it's just the loan that there's these clients couldn't able to pay the bills or the mortgage payment and so forth. Then directly, indirectly, the banks is involved with with the loans, commercial loans, mortgages and so forth. It's good, quite bad because it's a lot of people affected in America. So that's why the banks probably not one way or another is going to be affected. So that's why I jumped ship and gone into gold instead. And the other thing for me anyway, basically is like a lot of pension funds probably get a lot of affected because a lot of them, like in UK as well, the pension fund basically build up houses or lend it to a company who build housing for the students, accommodations and so forth, and renting out to get a steady income, so to speak, from through the rental. But that's not happening as good because a lot of people basically not go to school from overseas. First of all, international travel is down. Students going back into schools feeling there's COVID-19 happening in UK. I'm sure similar to America as well. And it's basically that's one main problem. Secondly, obviously, is the people are not able to pay taxes because there's no rental income, right? So those buildings that's renting out to, let's say, students, and they're not going in there, let's say, normal working people. They're not, a lot of them losing their jobs, so they're not able to pay. So a lot of eviction that's going to happen. And local council taxes or property taxes people cannot pay because they don't have a job. Utility bills go be late, and they have a problem putting food on the table. So all this direct and indirect is going to affect the banks. And then the other things that we probably need to watch out, which I've said before, is the inflation probably actually happening, coming in, because all this, the war of money that the Feds have actually printed to around the world. And the other thing is because of the U.S. having a spat with China. China used to buy a lot of U.S. loan, basically bonds and stuff from the Feds. Now it's just basically start selling. So who's going to buy it back? Just themselves, right? The Fed's going to buy back government bonds and so forth. So basically the dollar is just going to, there's a lot more dollar flowing around, and therefore it's going to be weaken the dollar. So what happens then is American dollars get weaker, and therefore when they buy stuff, let's say from Europe or let's say Canada, whatever, somewhere local, or even in Asia, it's going to be more expensive, right? And then America, Donald Trump might say, okay, go and make America great again, bring the businesses back in. But how many of those businesses are coming back? Remember, bring business back from overseas takes a long time. It takes money, and you need people with the right skills, right? America must probably will have a lot of those right skill anyway, but when you compare to 1.4 billion people in China and then to 300-400 millions in America, the number doesn't add up. So not all of them will come back to America. And then secondly, obviously in Europe, there's laws and rules tighter than in China as well. So therefore, the unit cost of building certain things like, let's say a pair of slippers in China probably costs you maybe 50p, but when you bring it back to UK, for example, it probably costs you £2 or something, because just simply the people cost and the rental costs and the taxations and all rules and stuff could make it more more expensive. So this means that we basically will have more inflation, even though if it's locally produced, costs more because it's cheaper than to import from China. But obviously, the import from China is having problem because of spat between U.S. and China, and in UK sort of follows suit as well. So relationship's not very quick with China, and then the only government continue printing more money, in this case US dollars, and obviously the more the US dollar devalue, so to speak, when you buy things from another country, it's going to cost more, right? Even you produce locally in America, it still costs more than actually producing overseas. So inflation definitely coming. That's why Warren Buffett actually went in and go dumping the bank shares and go into gold and stuff, because you can see inflation definitely coming. And then I said before, the economy is not recovering or coming in as firing all cylinders or recover as much as we hope for, and therefore we have like very highly likely we're looking at this deflation. It's not just America, I think UK as well and Europe as well. And the one bright spot I think is overall will be in China or Southeast Asia in general anyway, and China is the big main engine. And as far as I'm concerned, then also because of this the spat between US, America, and COVID-19 and so forth, and how you control that virus and how people actually listen to the government or not, kind of thing. You see the two tiers actually happening. That in America, you are in Europe as well, is fighting the pandemic, and the economy is slowly recovering, but not as fast. And people losing jobs and so forth, and obviously, and also people don't have much savings as well, and they use a lot of it for getting by, so to speak, to put food on the table. But you look at in Asia in general, people save more. They more of lending country to other countries anyway, lending to America or to Europe than actually borrowing from Europe, so to speak. So there's a lot more money available running around in Asia, and especially in China as well. And I believe in Japan as well. So that sort of helped them to recover quicker than in Europe. And basically, we see a two-tier system. Asia is recovering, getting better slowly. It's not great, but slowly getting better. And Europe is still down and under for quite a while. And it's just more like as far as I'm concerned, the last decade, Japanese lost decade probably happened in America, but probably quite different. It won't be as bad or something, I don't know. But all this extra money being printed, all these zombie companies running around that's not going to fold, worry about how people might fold, and loss of jobs and loss of economy and so forth, which Japan sort of saw back in the 80s, early 90s, and now America is going to experience. I think then therefore next couple of years, it depends how America is going to handle it. It could be quite volatile. And banks getting out of banks shares is definitely is good things as well. So that's how I actually see it at the moment. So for in the next 3 more weeks, we see volatility definitely from the election kind of thing. But overall, I was thinking, after that, the election comes in, we start to see, how the economy is kicked back in, but not as the right gears, and the whole thing's slow down. And I don't see next year going to be, great. But apart from gold, as far as I'm concerned, gold is definitely something as well. But also the other thing I also said before is watch out the weakening of the US dollars, just like back in 2007, 2008, when basically the world's in recession. Oil actually jumped up slowly, coming back up to 140 something dollars. And all at the time when the basically general economy in the world is still recovering or mostly in recession, but the oil gone up. Why? Because US dollars has been weakened a lot. Okay, gold also gone up as well. So watch out about the oils and stuff. Okay, we may not be having international traveling and stuff, but because so if a softer dollar is affect oil as well as anything that's have a dollar sign on it, US dollar sign on it. So commodities in general, they're kind of going up as well. So watch out those kind of things. Basically, that's enough for my chit chat for this week. Next is my update on my weekly portfolio. Okay, this week looks like there's quite a bit of changes, so I will just go through them. First of all is Apple. Short term is still a sell. Medium term is neutral, long term is a buy now from neutral last week. So slowly it's going up there, but still a bit volatile at the moment as far as concerned for Apple. Next is Amazon. Short term is a buy, same as last week. Medium term is neutral, long term is a buy. So it looks like the tech, like Nasdaq as well, basically haven't made the 12,000 or stay above 12,000 mark. It's tried to, but didn't. And I would just have to wait and see it. But basically, the S&P 500 and so as well as Dow Jones index is trying to catch up. So we just have to wait and see how it goes. Looks like Apple, all these technical technology shares seems to be, going sideways at the moment. Next is U.S. dollar against Australian dollar against U.S. dollars. Short term is buy, same as last week. Medium term is neutral, long term is a buy. So this is basically showing the weakness of the U.S. dollars. The Australian dollar tried to go back down to below the 0.7 mark, but it didn't have much chance. It touches 0.69 something, but then it should quickly recover and then stay above 0.7. It reaches 0.72 before and then come back down again. So it's hovering between 0.7 to 0.72 kind of area. And unless the US dollars continue to recover a bit, I don't think it will go down to even 0.68 kind of thing. So US dollar definitely losing strength here, and Australian dollars gaining strength. So just basically watch out. Once it broke above the 0.72 area, I think it just continue to go. I don't think US dollar will be great, but it might not be necessary right away, but probably sideways for a while. But I think next year will be something to watch out for. Next is Brent crude. Short term is a buy, medium term is neutral, long term is neutral. Also after that is crude oil, WTI. Short term is a buy, medium term is neutral, long term is a buy. So overall, as far as I'm concerned, the crude oil is hovering underneath the 200-day moving average. Is try to break above it, still having a bit of problem, but I don't expect this to continue for too long as far as I'm concerned, because I think at the moment everybody's talking about the election in America, but I think after that has gone out the windows, we probably see the weakening of US dollars going to be talked about, and I think overall anything that's have a dollar is priced in US dollars, it's going to slowly go up. So watch out for crude oil, okay? Brent crude oil, WTIs. I think they got legs in it. Probably not this year. It only got like 2 months or so left, but next year. So watch out for Siemens Go as well. Next is DAX in Germany. Short term is a buy, medium term is neutral, long term is a buy. So changing sign here. After that is Dow Jones. Short term is a buy, medium term is neutral, long term is a buy. So similar to last week. Dow Jones basically doing catch up where Nasdaq's not moving up. It's going sideways. Similar to S&P 500. So I personally feel yes, there will be a lot of volatility until the election and so forth. But I think if my hunch this is correct, then this will continue. I mean, the stock market on Dow Jones continue, but as far as trend following is concerned, what I think is irrelevant, because I can be as wrong as anybody else. So remember to follow system, but the system basically say at the moment, because of the price from the market is telling me for Dow Jones is a buy, short term is a buy, medium term is neutral, long term is a buy. So watch this space, man. After that is next is FTSE 100. Is also slowly following Dow Jones now. It's gone to buy short term, medium term is neutral, long term is also neutral. So with the COVID-19 and possible more extra lockdown, and we have the Brexit coming up, so the stock market sort of for FTSE anyway, it's always a lot more side trade than having great trend most of the time. But at the moment is short term is a buy, medium term and long term is still neutral. So we just have to wait and see what happened to COVID-19 lockdown as well as the Brexit. Next is gold. Short term is a sell, medium term is neutral, long term is a neutral. This is a bit of just similar to last week. I mean, when Donald Trump actually went to hospital, the basic goal is just stuck still underneath 1930, 1920 mark. So this the 2011, 1920, 1910, 1900 areas, that's still sort of like resistant, and unless go way above it, stay above to 1920 on a weekly basis kind of thing. I think it's more or less like still waiting to break up, and gold don't seems to move even though you have good news that um, you like it that way or not, that Donald Trump got in the hospital, it shake the market quite a bit, and gold just couldn't move. So just like what is dragging it, I'm not sure. So just watch out though, okay? Next is Hang Seng in Hong Kong. Short term is a buy, medium term is neutral, long term is a sell at the moment. So it's recover a bit. So short term wise, it's falling down Jones. So we just have to wait and see. Nasdaq, like I said before, short term is a buy, medium term is neutral, long term is a buy. It's basically going sideways as far as I'm concerned. If it gone above 12,000, that would be great, but I think it's just hovering around between 12,000 and 11,000, up and down there. It's not much of change so far. Next is Nikkei from Japan. This one changed sign again. Instead of sell and neutral last week, it's gone all buy across the board. So buy for short term, medium term, long term. Basically, I think it looks like you've just done a lot of sideways at the moment trade at the moment, and we don't know what will happen next. But as far as I'm concerned, the system is saying buy across the board for Nikkei 225 in Japan. Next is silver, similar to gold. Short term is a sell, medium long term is neutral. Again, I'm disappointed, even though there's quite a bit of movement in silver, but it's still below the it's sell short term as far as concerned. The 280-hour system still telling us there's a sell. So unless we have a big recovery, we don't know. But I think personally, I think gold and silver coming down at this moment is a great buying opportunity personally. But we have to follow the system. Why do I think it's good buy at this stage? Because I do expect inflation coming over and the weakening of US dollar, and so gold and silver probably will hold its value, and similar to crude oil. But as far as I'm concerned, I follow the system. I'm a trend follower, but I'm also keeping an eye on this, just to make sure when gold, silver, and crude oil change sign and go straight up, I'm basically just go on to it. Crude oil already changed sign. So we just wait for gold and silver to change the sign as well. So follow the system and see how things goes. Next is US dollar against Chinese yuan. It's sell across the board. Basically, it's last week or so, China has been more or less in a celebration for about, I think, a week, and the US dollar against Chinese yuan basically, while the Chinese is having a bit of a national holiday, the strength of the Chinese yuan is strengthened a bit, and then US dollars is weakening. So sell across the board there, and that basically said, this kind of thing is a good thing to stop here just to have a quick chit chat about China. I think a lot of people in overall in Europe as well as in the West in general, America maybe as well, that think this the spat between US and China with the tariffs is really hurting China, but if you look at the statistics, if you actually look into China, how much actually they export, it's barely about 20-25%. Mostly it's internal consumption. It's on up to like 50-60% or 55%. So when the lockdown, sort of finishes and China coming back up again, okay, so long as they can keep a job and people still have their savings, they just go to help China themselves to be more consumption led instead of export led. So they're buying things from outside. So if the Chinese yuan getting more strengthened, more expensive than US dollars, that means that when they buy import from another country, it's cheaper for them. When they're selling to another country, it's more expensive. But since they're not the engine of the Chinese economy, it's not really export-led anymore. Since 2007, when they learned the rest of Europe, all the export partners having a recession, they really have changed the business model, so to speak. So they're more consumption-led than actual export-led. So the spat between U.S. and China is basically it's hurting China, of course. But when you think about, does it hurt China more than hurt America more? As far as I'm concerned, it's hurting America more. China have the staying power. That's just my view. So with the Chinese yuan actually going up, economy, as far as I'm concerned, Asia will pick up first before Europe. I personally feel people will basically will if they have any pension funds that actually look into have the options to get into gear with the Asian fund or something, more Asian Pacific kind of shares and pensions Pacific in that area. I think this is good to actually go that way. Okay, that's my chart on that one. Next is US dollar against Japanese yen. Short term is a buy, medium term and long term is still a sell. So a bit of fluctuation there, but not much movement from last week. British pound. Next is British pound against Japanese yen. Buy for short term, medium and neutral. Long term is also neutral. British pound against US dollar. Buy short term, medium term is neutral. Long term is a buy. So as far as concerned overall, short term wise, British pound seems to have recovered a bit, and I think this is largely due to US dollars being weakening, and Japanese yen is not going anywhere. But we have the basic COVID-19, which really affecting the economy. We have the chancellor who say we'll try to help the economy by another stimulus package, not as good as the one before. But at least the government is still available to help. But with the lockdown of COVID-19, I think next week we will have a lot more information about England, how lockdown is going to be. I mean, it's already affecting Scotland, Wales probably coming up next. And so whole of United Kingdom partial lockdown is definitely coming into the full national lockdown. We're not sure until next week. But if any lockdown is going to affect economies and basically how people go to, survive, how the shops going to survive, how the people that we employ to actually go back to work, and then suddenly you have another shut down again or partial lockdown, and that's going to affect them. How people then therefore go put food on the table, how they go to pay the mortgage. It's the same thing I talked about earlier. It's going to affect America, affecting Europe. Just go to be really scary. I'm lucky enough to be in the IT sector, and I'm still having a job, but to a lot of people, especially hospitality sessions, totally, it's very, very difficult for them. Next is Bitcoin. Short term is a sell, medium term is neutral, long term is neutral. Still very disappointing, but it does on Bitcoin have broke back above the 11,000 mark, so it's getting there, but still underneath the 2 ATR line. So just basically wait and see how it goes. So let's see if actually broke above the 11,500 or stay above a bit higher and make to 12,000 and make some headway. Otherwise, still a lot more sideways trade as far as I'm concerned. Next is LTL, the iShare 20 TLT ETF. Short term is a sell, medium and long term is neutral. That's given. Basically, the Dow Jones continue move up. US stock market seems to recover a bit and moving up. So of course, people coming out from basically ETF, so to speak, from the bonds ETF. Now, last but not least is Tesla. It's buy across the board. So buy over here. Short term, medium term, long term is still a buy. So as far as I'm concerned, Tesla, however much I think is overpriced, the stock market thing is a buy. My system thing is so as well. So as far as I'm concerned, as a trend follow, you just follow your system. So that's basically the end of this update for this week. But so watch out for the next 3 weeks or so and see how the greatest showman on earth at this moment in time is your President Donald Trump in America, and see how he goes and see how his skill from apprentice and his businessman skills help him to hopefully if I have to bet a betting man, I will bet him that he will return back in office, but it'll probably tight, and we just have to wait and see. I hope I'm wrong, because I really don't want him to be in there, but I don't think Biden in my view is any better. I think Donald Trump can deal with China better than Biden as far as I'm concerned, but if a softer approach to China probably is better for economy, for the American economy as well as for the world. So I'm on split on 50-50, but from what I see, how Donald Trump can manipulate the communications and tweets and the market in general, I think he probably get re-elected, and we just have to wait and see. So this is the end of my update for this week. I will talk to you next week. Bye for now.